Apple is having a rough time in China.
We have sort of a collection of items going on, some that are macroeconomic and some that are Apple specific.
Do have to wonder whether this, in some respects, opens the floodgates now to more companies, more CEOs coming out and cutting their numbers as a result of the trade war and weakness in China and elsewhere.
Apple remains one of the biggest and most powerful companies in the world, and iPhone sales remain its most important metric. So when iPhone sales slump in China, it means billions of dollars lost, and it rattles markets across the world. There are three big factors dragging down Apple in China. China's economy is slowing down. China became the second largest economy in the world in lightning speed, but cracks are beginning to show. Car sales are shrinking, recent manufacturing data is slowing, and the Chinese stock market posted its worst year in a decade in 2018. Wall Street fears that could mean that growth in China and the rest of the world is slowing more quickly than anticipated. Apple products are expensive, and a weak economy means fewer people buy them. China is the world's largest smartphone market. With more than 1.3 billion people and a fast-growing middle class, that's to be expected. And Apple's far from the only game in town. There's Huawei, Oppo, Xiaomi, and OnePlus. Those are only some of the native Chinese smartphone makers that consumers there can choose from. They're cheaper, and Chinese consumers don't have the same kind of brand loyalty as American smartphone buyers. Apple's also facing competition from itself. Fewer and fewer iPhone owners are upgrading to newer, more expensive models. Instead, they're upgrading batteries and holding on to older models for longer and longer. On top of all of this, the United States and China remain locked in a trade war, and it may finally be taking a toll on the already slowing Chinese economy. China's GDP growth slowed in the third quarter, posting the weakest pace since the financial crisis. President Trump and China's Xi Jinping agreed to a 90-day trade war truce in December that ends in March, but tensions haven't let up.
I have felt all along something that no one wants to talk about.
Which is?
The Communist Party doesn't want you to buy Apple.
The tariffs rolled out by the United States in 2018 did not directly target Apple's iPhones, but the company warned in September of that same year that they would hurt sales in other areas like the Apple Watch and HomePod. This time, though, Apple CEO Tim Cook says the trade tensions exacerbated economic conditions in China and have reached consumers, and by extension, the iPhone.
If you look at our results, our shortfall is over 100% from iPhone, and it's primarily in Greater China. And so as we look at what's going on in China, it's clear that the economy began to slow there for the second half. And what I believe to be the case is the trade tensions between the United States and China put additional pressure on their economy. And so we saw, as the quarter went on, things like traffic in our retail stores, traffic in our channel partner stores, the reports of the smartphone industry contracting, particularly bad in November. I haven't seen the December number yet, but I would guess that would not be good either.
So while all eyes remain on Apple, the story of slowing global growth may soon envelop more and more American companies.